How's everybody out there doing? We're going to talk about investing in real estate, understanding the numbers from that aspect. Because if you want to really invest in real estate, you got to understand the numbers and how they work. You got to have the end goal in mind of what you're trying to do and what you're looking to do. Let's say if you want to make $10,000 a month, how can you do that? One way you can buy maybe about nine two-family flats at $575 a unit, or you can get 12 single families at $850 a unit. Both will give you around that passive income a month, $10,000 a month. You got to have that idea and that concept of what you want to do and how you're going to acquire that from the beginning. And then you start looking at how you're going to accomplish that through the finance and what resources you're going to use. So that's the whole thing is, where do I want to be? You know, you can start with like a 5-year plan or whatnot, but just really what's a good income for you to break out what you're doing. Start with that and then build from there. And then as you get to that step, you can graduate from that point. The second thing is, what's driving the market? What's driving the investment opportunities in Detroit? For one, Dan Gilbert has put $2.2 billion invested in downtown Detroit by himself alone since 2010. So since that, a lot of investors have followed suit. And you got everything from the downtown area to Midtown to the Bagley area to East English Village, all increasing in value. So you see investments and investors pouring their money everywhere. So you know it's going to continue to go up, but for how long? So you want to continue to do what you need to do and do your due diligence and actually acquire some of these properties where there's nothing left for you to get. A third thing to find out is pretty much, what formulas do I need to have? This is real estate, right? This is investing, this is math, this is numbers. You need to know what's going to tell me what's a good deal and what's not. I mean, one of the first formulas you start out with is your net operating income divided by your sales price equals your cap rate. To give you an example, something like that, a general number for the nation, maybe like 9 to 10%. If I get 9, if I get 12% back on as far as my cap rate on the property, I'm doing pretty good. Well, 5 years ago in Detroit, you can get high as 35% on your cap rate. I mean, so this is one of the best markets, but that is shrinking. At one point, Detroit was the number 2 rental market in the country. Now it's 13. So it's the numbers is getting higher as people acquire more properties. And what that means is other people are steadily getting richer. And if you're not investing, you're not. So you don't want to wait to the last minute or wait till there's nothing else out there. Because people are pouring their money right and left. There's programs, there's nonprofits, there's different entities putting together programs to acquire properties. So you want to make sure you're doing what you need to do. And it's just bigger than having an opportunity or a desire and say, I see a deal and I want to do this. You got to have the right strategy. So you got to have knowledge, understanding the market and what do you need to do and what you want to do. I've been investing in the market since about 2002. So that's like 15 years. So if you got any questions, comments, just put them right in the comment box. Any desire, any interest, any areas, ideas, what do you want to do? Feel free to just drop me a comment. That's all I got for you now. Peace.